All right. Good afternoon and evening, Miles Ahead crew. We are super excited to have you all here with us with our very first Ed Talk of the 2021 year. And of course, we are right on time because tonight we're talking about the child tax credit with the Reggie Clark from Appropriate Accounting Services. So we are super excited to have him here, you here, and our whole Miles Ahead crew here today. So we're going to go ahead and kick it off and just kind of touch base with what we've been up to and just kind of let you know what Miles Ahead is all about. So our agenda for tonight is just kind of welcome, set the purpose, set the tone. Then we'll go ahead and transition into Reggie, and then we'll just kind of open it up to some questions and answers. So if you have questions for him, he is an accountant. He is going to be talking about the child tax credit. He's also going to share his information. So if like, this is someone I definitely want to know,
If you have questions for
feel free to do so. And then we'll kind of wrap it up by talking more about Miles Ahead. So let me tell you a little bit about Miles Ahead. At Miles Ahead, our mission is to focus on the whole child through academic growth and individual achievement. We are starting the 2022, that's in 12 months school year, with grades kindergarten through third grade. After that, we're going to scale up until we reach a full K-8 scope. And like I said, we're rooted in the EL education belief that schools are a place where we focus on the whole child, not just who they are academically, but who they are socially, emotionally, physically, so that way they can grow and prosper into a 21st century education. That means we're taking the digital native of who your child is and preparing them for a world that we don't quite know what it's going to look like just yet. And we're doing that so that way they can realize their impact for local change and global change as well. So I'm going to take a second and just kind of talk to you a little bit about Reggie. So Reggie is here right now. I'm going to go ahead and let some more people in the room. Reggie's coming to us from Appropriate Accounting Services. He is his own business owner. And if you go to his website, I'm going to drop it in. Reggie, would you mind just dropping your website into the chat box? That way people know how to kind of find you and follow you.
Sure,
Reggie, yeah,
great.
thank you so much.
No problem.
Reggie is a father of 2 young girls. He's also a husband, he's a community member, and he's the owner of his own business, focusing on accounting services. And if you go to his About Me section on that website, he kind of talks to you a little bit about having been a small business owner and kind of his passion to drive through and make change for small businesses as well as for other individuals. So Reggie, do you want to kind of take a second and just tell us a little bit about yourself, a little bit more about what brings you to Miles Ahead today?
Sure. So first of all, I want to thank you guys for having me. And I also want to just commend you on the great work that you guys are doing with the charter schools. Definitely a need for that and in our community and just in our society. So, first of all, just thank you for having me. I do have a connection with one of your board members, Erica, who is a great person and also a career woman, as well as just a great community advocate. So, she kind of brought me in with you guys to tell you a little bit about the child tax credit. My business, I've had it for since 2010. August 2010 is when I started. And like you said, there was a passion for it because of some of the things that I saw when it came to the tax code that I could benefit from. So what I've done is really the people that have been in the area that I kind of, grew into and I'm still in, those that need that individual tax help. And when it comes to some of the things of finances and the scary accounting work that, a lot of people don't really want to deal with, then I've been there to kind of walk people through that. So, those that have started small businesses, those are established small businesses, and they just want to know what they need to do to stay compliant for one, to save on taxes and move on to the next level. So that's been the area of expertise that I've been able to provide to my clients. And even, some of my friends to be able to help them kind of navigate that area that, at times is not very clear to us.
That's awesome. Thank you so much, Reggie, for sharing that and for being here. We are going to grow tonight because of you and your expertise. And you already touched on it. So I kind of want to dive on in and I want to open it up to you to talk a lot about the child tax credit, what you think we should know as parents, as community members, and what this means for us. So I'm going to let you go ahead, share your screen
Sure.
and take it away.
All right. Let me know if you guys can see everything showing up for you. Okay. Perfect. Perfect. So what I want to get into is the 2021 child tax credit. So what you need to know, and then how this may affect you. I've already gone over a little bit about my business and what we do, but again, it's not so much as providing service as much as it is giving the education as well. So I do always push upon my clients that they at least know kind of a base about what it is that they're doing and what their situation is. So obviously I would bring that expertise to help them along, but there is a little education factor in there so that they're able to know what it is they're talking about. We get a lot of things that come in. Well, my person said this, or someone told me about that. And so what I like to do with my clients is make sure that we have that open conversation so we can kind of weed out myth from truth. And so for our agenda today, what I want to do is first just going to give an overview of the tax credit. Then we'll discuss some of the phase outs, as well as the advance payment. That advance payment is going to be very important because, as you know, or may not know, is they started the payments in mid-July. And so we want to give you a little bit of information of how to navigate that, what to expect, and maybe what's already going on and what are your options there. And then, as Coach said earlier, we will have a Q&A. But as she said, this is a free-flowing conversation. Feel free to stop, and if you have questions, put them in the chat, and Colt will interrupt me, and we'll see if we can get some of those questions answered for you guys. So first off, what is the child tax credit? So the child tax credit, or the CTC, is a credit that you receive for each dependent or child within your home. And so historically what it's been is this been a credit you get per child for about $2,000. But as you know, from some of the past tax reforms, it's really been rolling. So normally we would end up with about, every 20, 30 years, we get an overhaul of the tax reform. And we got that back in 2017 with the Tax Cut and Jobs Act. Now, what the current administration that we have has kind of piggybacked off of some of those changes and either created additional changes within the code or tried to kind of keep that going with what we saw with some of the stimulus checks, 1 through 3 that came in from 2020 to this year. So that child tax credit was $2,000, but then in 2021, they made a change where it increased from $2,000 to $3,000. Now that's for children that are 6 years to 17 years old. And then the children that are under 6, that one is for $3,600 per child. The age of those children that qualified, they increased it from 16 years old to 17. So that was one of the changes from 2020 to 2021. And then what I also want to make sure of is that this audience knows that there's only one taxpayer per qualifying child. So you won't be able to split the child per return. And that whatever one that child sits on, a tax return that child sits on, that's where they will be and get that credit for. Other things that help you qualify is you must be a U.S. Or have a U.S. residence here at least half the year, or be a resident of Puerto Rico. Unlike before in 2020 and previous, the CTC is refundable, but they made that move in 2021 where you can receive a refund from that credit. And then again, what we'll talk about a little bit later is that they did make it so that you have a program to receive your credit monthly in what they call an advance payment. So you can receive half now, July through the end of this year in December, and the other half you're receiving your tax return, but we'll get a little bit more into that. What I do want to do is take this time to kind of show a video that really goes through the overview that I just went to, but kind of give you a little context and give you pictures and video that really helps kind of sit and bring it home for you. So I'll do that share in 1 second if you give me a minute.
We now interrupt our regular programming to bring you a special announcement. The biggest change for 2021 is an expansion of the child tax credit. Can you say complicated? The new per-child credit moves from $2,000 to $3,000 per child, or $3,600 for children under 6. But the income phase-out to receive this higher benefit is much lower. The child tax credit now includes those who are age 17, a one-year increase from the old rules. The credit is now fully refundable and does not require a minimum amount of income. Plus, you can receive half of the credit with monthly payments beginning in July, or you can opt out of this feature. Got it? Oh, and if you miss the increased credit, never fear. You can still receive the old $2,000 per child tax credit with the old income phase-outs. Here, take a look. Remember, as of now, the new child tax credit is a one-year change for 2021 only. So stay tuned and look for payments beginning in July for the new child tax credit, but only if you qualify.
So I hope that was helpful to you guys. I know video really, resonates with me. So I thought that it was important that you guys were able to see that information. So I'm going to reshare my presentation. Is that still showing up for you guys okay? All right, perfect. All right, so moving on, one of the things that the video did discuss was the phase out. So the phase out, and as you know, when it comes to taxes, it can be a little complicated. So what I wanted to do was kind of take a little bit of time to discuss that. I wish I could say take out the complexity, but what I will do is try to explain it as best as I can to help you guys. So if we have any questions on it, it doesn't make any sense, throw something in the chat and we can discuss either now or during the QA. So if you look at it for 2020, where I want to start is if you are married filing jointly, so not married filing separately, but married filing jointly, what they look at is the modified AGI or adjusted gross income. So it's basically all of your income and then a couple of changes made to it to get to that, what they call modified adjusted gross income. So 400,000 for married filing jointly. And then for all other statuses, they look at 200,000 as far as your income. And this is for the phase out, meaning that once you get to this income level and start to surpass it, now your credit will decrease, all right? So for that old phase out, the credit per child was $2,000. The reduction is $50 for every $1,000 that you are over. So if we, for instance, we were married filing jointly and we make $401,000, then it's going to decrease that $2,000 per child to $50, which would then be $1,950. As I mentioned earlier before, the credit in the old phase out, the old child tax credit is non-refundable. There is a partial, I say partially refundable because there is an additional tax credit where they look at some of your income and then do a formula to then decide if you do actually get a refund from that. But the base of it is, if you just want to think about it simplistically, is that it's normally non-refundable. Now, when we talk about 2021 and the changes that they made, what they did is they actually stacked on a phase out above the normal phase out. So first of all, thinking about the increase that we had going from $2,000 to $3,000 or $3,600 if your child is under 6 years old. So what they do is they have, for that increase, which would be 1,000 or 1,600, whichever, however old your child is, they do a phase out and they look at married filing jointly, surviving spouse, and saying, okay, $150,000 is where we start to phase out or decrease the credit. And then so on for head of household, and then all other statuses. So again, using the example of going just $1,000 up. So if you are married filing jointly, making $151,000, then that means you're going to have a $50 reduction in that credit per child. Or if you look at that third slot where we have the reduction, you'll see is to basically reduce that $1,000 or $1,600, or about 5%. So if we want to really look at it, and I know, numbers normally resonate with me, obviously, and help me, their phase out for merit filing jointly would be 150,000 to 170,000. And when I say that, what I'm meaning is that 170 is if you have a child that's 6 years to 17 years old, that's when you get nothing, okay? Now, if you have a child under 6, then that phase out is basically 150,000 to 182,000. What does that mean? Child is under 6, you make $183,000 as merit filing jointly, you receive $0 from that increase of the credit. So if you keep thinking about it again, the normal phase out is dropping you down to get to 0 in that phase out, that top end number. Whereas with the special phase out, it's topping you off to get rid of the additional $1,000 to $1,600 that they've given for the 2021 year. All right. And keep in mind that this is refundable. So when I say refundable, not just the $1,000 and the $1,600 that is increased, but also the $2,000 normal tax credit that you're used to receiving. So that full amount will be refundable on your tax return should you end up with a refund on your tax return in the 2022 tax season. All right, and so one other piece that I want to point out is that, again, once you have dropped down that first $1,000 or $1,600, assuming that you're out of that range. So let's again use merit filing jointly. You're out of the range. You have a 6-year-old, so that means you're getting a $3,600 credit, but then you make $183,000 as a married couple, and then that's going to essentially wipe clean that $1,600. Now, what they do to determine if you're still going to get part of the credit, now we go back to the old phase out, and then we use those numbers and identify, okay, are we a married couple making more than $400,000? No, in this situation, we're making $183,000. So we are going to be allowed the full $2,000 tax credit using that old phase out. So I know it was a lot said there. So, Colt, definitely stop me, let me know if we have any questions that's come up in the chat, and I'll make sure that we can get those answered. But if not, we can continue on.
I was going to say that I don't see any questions in the chat, but I do appreciate you laying this out where clearly what, based upon your AGI, particularly in married households or households where you're filing jointly, what has been the case like 2020, where you don't typically get that refundable, it's a non-refundable amount. Now it sounds like it is. So I'm going to be curious about what happens kind of in the future beyond this. So thank you for really emphasizing those points.
Right, yeah, definitely. So you can be looking forward to your 2022 tax season when you do fill out your return. And, for those that may have been wiped clean because, thank God they're making a lot of money, but then unfortunately not able to benefit from the credit that's available. So that'll be something for them come this next season. All right, so payment of the child tax credit. So first of all, what they have done, as it mentioned in the video, is they split the credit in half. So the first half is paid out in monthly installments, so basically advance payments from July all the way to December, and is paid the 15th of every month. The other half you can expect to receive during your tax return. So now what I want to do is kind of go a little bit into the first half, the advance payment, and what to know and what to expect. So as I mentioned before, the timing of it, mid-month, every month, you should see something drop into your account or a check coming in the mail for what they've come up with as your credit for that amount. Now, how do they come up with the credit? The way they come up with the credit is that they use information that they have from you in the past tax returns, either your 2020 tax return or 2019 tax return. And if they don't have those, that piece of information, then what they're using is what they have in the past. So that's something that you want to make sure that you've gotten updated if you're not receiving that credit and you're not receiving those advance payments, because they're only using the information that they have. So be it bank information that you want to have updated, or if you want to let them know that, hey, I just had a kid in 2021. Well, they're not going to know that because their kid hasn't been inserted onto a tax return and won't be until 2022. So there's a portal that they've come up with, and I have it in references, a references slide for you guys and resources slide for you guys and for your audience, so that they can get to that and then know where that portal is, know how they can update their information.
And Reggie, I don't want to interrupt you, but we do have a question.
Sure, good.
So a question came across and it says, how could this credit potentially impact my 2021 taxes if I typically owe?
Very good question. Very good question. So if you typically owe what they call is an excess of the advance payments, then what's going to happen is that you're going to owe on top of owing, or basically it will increase the amount that you will owe for that tax return. And so what they recommend is if you're pretty certain that that's going to be your case, then what you would do is opt out of the advance payments. And going through the website that they have where you can manage your payment, they have a manage payment button, and something on the portal for you, where you can now say, hey, I do not want to receive these allotted amounts in advance payments on a monthly basis. Now, what you have to keep in mind of is the deadline for you to do that. So obviously we're already past the July 15th date. So if you receive those funds, you just received those funds. So store them away and have those ready to pay taxes if you know you're going to owe. Now, if you want to get ahead of the payments that are coming and that will be advanced, then there are dates that they have on the site, but I can share with you guys here. So for August, so to not receive the August 13th payment, you will need to have opted out by August 2nd. Okay, so the rule of thumb they're doing there is roughly about 7 to 10 days. I would say go with the 10 days to be safe, to go and opt out. And keeping in mind, once you opt out, there's no re-enrollment. So you can't kind of double dutch and hopscotch back in and out of those advanced payment plans. So understand that that's a one-time deal there. Now, for some of the other ones, September, you want to have it done by August 30th. October 15th, you want to have that done by October 4th. November 15th, you want to have that one done by November 1st. And if you decide to opt out at the last month, December 15th, you want to have done the opt out by November 29th.
Awesome, thank you. So very clear cut case. If you haven't opted out by now, definitely make sure you do that. And if you typically owe, make sure you opt out. So thank you, Reggie.
Yep, no problem, no problem. And so then what will happen is when it comes to all of this, there'll be a notice that you should receive by January 31st of 2022 that kind of details out what it's going to do is identify who you are as the taxpayer. It's going to also show what your monthly amounts are and then give your full credit. So don't think about it as the half credit for the year. It's going to give you that full credit that should, that they're expecting you to take on your tax return. But then, of course, give you those monthly amounts that they pay over the 6 months or less during this 2021 year. Another thing I want to point out is there's no administrative offset, meaning that if you owe from previous tax returns or have any garnishments that normally occur on your wages, this is not going to be affected by it. So if they have in their system that you will receive the tax credit because of the situation that you have from an income standpoint, you have qualifying children or dependents, then you're going to get the monthly payments, assuming that you don't opt out. All right. And then when it comes to the second half of that you will receive, again, you have those excess payments, which we kind of discussed in detail. But what they also have is a safe harbor on that to try to help eliminate not owing so much when it comes to the tax return. And so with that safe harbor, there's, the IRS, they love complicated formulas, but there's a complicated formula that they come up with to essentially try to limit the blow that you may have from owing on your tax return or having a tax liability because of the excess payments. So don't think we have a whole lot of time to really get into that one, but I would say definitely talk to myself or your tax advisor offline about that if you're in the situation, as was asked earlier, that you believe you will owe as a result of taking these advance payments.
And Reggie, we had a couple other questions pop in. I think.
Okay, great.
The first one, it's kind of got two parts. Will I receive a notification via email or mail before funds arrive into my account? And then I think the second part of that is, or do I need to just check the account from time to time?
Um, so to answer the first one, you will likely not, okay? It's kind of a 50-50, and I hate to kind of give an answer like that. So for instance, with me, I have two small children. I received mine, and then shortly after, I checked the account and saw that it came in. So I will say for the first one, what you can do is expect something this year. Now, understanding that there's a backlog, of course, with COVID and everything that is brought to us as a society. IRS has been one of those, entities that's been hit pretty hard. They have a backlog of everything. So they have a backlog when it comes to processing returns, processing amended returns, and some of the other issues that they have to handle. So it's not likely that you will receive something before, but you should receive something this year. And I hate to give that answer, but that's unfortunately what I have. But I would also say definitely check the account. So what you will see in the account on the 15th is a funny number that you probably aren't used to seeing, a very specific number. But what you want to look in the memo is look for child CTC or child TC, I believe, is what you should see in that memo. So look for that and search for that, and then just look for it around that mid-month time frame. You should definitely see the credit, the advance payment hit.
Thank you.
No problem. So I know we've reached the end, and just want to see if we had any additional questions that may have surfaced up, or any additional questions from you, Colt, that you think the audience would like to know about.
Absolutely. Now that we've got you, Reggie, here we go. Excellent. So first question, right? Just to start it off, how do we know if we even qualify for the CTC?
Yep, so that's a very good question. On the site, which will be in the references and resources slide that I have, they have something where you can essentially put that in to see or put in some information and be able to tell you if you will qualify. What it also probably do is kind of drive you towards creating an account with the IRS if you haven't already, which is where they're moving towards, where a lot of information will be. It's helpful for me as a client provider to then be able to see that, assuming I have a power of attorney. But if we kind of go back to the slides that we had earlier, you really need to have a dependent, and then it just really based on your income. So what we call a modified AGI. So if you meet those, when it comes to the different phase outs, again, that new phase out, or what we call a special phase out, and then if you don't meet it on that regard, then the old phase out and the credits that we've had before, then just meeting those is what it really gets down to. But you have resources available to definitely give you a straightforward answer. This is what you're receiving in advance payments, which is essentially letting you know you will qualify for the credit.
Awesome. Thank you. The next question is very selfish because I'm curious, and also for financial planning. Can you explain the difference between the CTC payment and then just the stimulus payments? Because I know with the stimulus payments, those included if you had a dependent. So what are the layers there?
So when it comes to those two, they're both related to credit. So you had the RRC, which was the recovery rebate credit. So if you guys remember kind of the timeline, especially around COVID, a lot of this was seen as the COVID relief. You've heard it as the stimulus payment. Officially, it's the EIP, which is the economic impact payment. And so we had payments that came in April 2020 for most people, again in February 2021, and I believe a few months later in May or so, or maybe April in 2021. So those were the first, second, and third payments. So essentially, all those payments were credits for what they call the recovery, because of everything that was happening from a COVID standpoint. There were people that were missing income, whether self-employed or employed, or being laid off. So they had those different payments come through to help with that. Now, when it comes, sorry, just to go back to that, that's really more of a new credit if we look at that one. Now, again, that won't be something that will I would anticipate that we'll see every year, but it's one of those special case situations. Now, the child tax credit is a credit that we've seen before and we've had historically, all right? The only difference is there's been that 1 year change, that we've shown earlier of what they're doing for that credit. So if we kind of take a step back in the Trump administration, we had the tax reform in 2017, where we made those changes from 2018, starting from 2018 to 2025. So then whatever we were doing in 2017 and 2016 with the tax code before that, we're assuming that we're going to restart that in 2026 because he only had these set for a finite time. So the tax credit, it is what it is for the 7 years. Then to make it more complicated, we did something for 1 year within that time frame. Then once we get back outside of that 2018 to 2025 tax range, in 2026, we're going to go back to some of our old settings and old tax codes that we had in 2017 and pre.
Got you. Thank you for laying that out very specifically.
No problem.
Another question from the audience came in and it says, if I haven't yet filed my 2020 taxes, but will do that next month, will the IRS update my CTC payment based on my newly filed taxes?
Yeah, very good question. Thank you for asking that. So when it comes to a situation such as that, again, like I mentioned, they're going to use whatever the last piece of information that they have. And then if you file 2020, it's really based on if they processed it. So if they processed it, and within that time frame, you will have an update. But what I would recommend and what they recommend on the site, you'll see as well with the resources, is that they say if you have changes and if you made changes, you go to that portal and you can update it yourself. And then with the assumption that we should then by that next payment be able to see those changes come in for your credit and for your payment. So very good question.
Awesome. Thank you. Let's talk about what you think we should be doing to plan for the future. So what are some changes that we should anticipate when filing our 2021 taxes for in the year 2022? So next, if you're me, April 13th.
Well, yeah, definitely depends on your situation, but this, of course, what we're discussing is one of those areas that you want to look out for and any changes there. Then it really just kind of gets to your budget. A lot of things that I always, describe and push for my clients is what is your budget? Because from a planning standpoint, I can put out anything and everything that you can do in that time frame, but your budget may not be able to handle it, especially if it means something is, we can use a simple case as retirement. Doing the max in retirement, doing the max in an FSA or an HSA, but then it's really along the lines of can your budget handle that? But aside from the child tax credit, there is another one on the dependent tax credit that we'll want to be mindful of. So those, such as you and I and some of our audience members that have kids, when it comes to the FSA, that FSA is a good tool that I definitely recommend to my clients to use, where you can get that $5,000 for dependent care expenses. You have daycare. We know daycare for a full year is way more than $5,000, especially if you have multiple kids like myself. So then what they've done for this year in this 2021 season is basically doubled that in a sense. And so that's a planning tool that you guys can look into and talk to myself about it, or talk to your tax advisor and say, hey, is this something that will benefit us that I can get into? Now, from what I've seen and in my research, I haven't seen it where they pushed it to where, for instance, your employer can now open up maybe your benefits portal to allow you to now change that number that you've been putting in. So let's say you're putting the max in to get the 5,000. I haven't seen anything that's come out that said, hey, now mid-year you can change it to try to catch up and get that 10,000. So then my expectation is that it will be something that you will be able to get on the tax return as opposed to doing it as you're used to it on your payroll.
Got you. Thank you again.
Mm-hmm.
I think we've got time for probably one last question.
Okay,
and it's
perfect.
If I haven't received it yet and I haven't opted out, what do I do? Where should I go to find out more?
Perfect. So you want to definitely go to the online portal that they do have to then put that information in. What they have is, because they had the same situation for your stimulus checks, where essentially you can kind of do a trace. So there is a form out there, I believe it's a 3911, that you can complete and fill out that will then kind of help try to find where is my payment. So that's the option that you have. So I would definitely recommend, for one, this is just aside from the child tax credit. If you don't have an online account, go ahead and get an online account. That way you can easily get into it because a lot of times, most times, the IRS works off of snail mail, which you really would prefer to have kind of more instant information than through that. Then two, in relation to getting your payment is to get to that online portal, get in there, log in, find out the information that you need to. And if you're not getting anything that's showing you that payment is coming or that payment, or even if you're seeing something that says payment should have been received, but you don't see it, that's when you need to go the next step of doing a trace. So that trace, they basically have what they've provided is if you're expecting a direct deposit, then roughly up to about 5 or 6 days afterwards, you want to start putting a trace out on that. Now, if you were to receive it in mail, via mail, then you're looking roughly about 4 to 6 weeks before you start the process of doing a trace to try to find your payments.
Awesome, Reggie. Thank you so much. That was super, super informative. I personally appreciate teachers, so I appreciate you. Thank you. And I admire anyone that can make tax code sound manageable. So thank you so much. And
No
you've got some
problem.
great resources here.
Yep. So these resources have been shared with you guys that you can share with the audience. I didn't want to put long, lengthy links on there, but if you click on there, there'll be links that you can provide and share to the group. For one is a good one here at the bottom where you see calculate how much you will get from the expanded child tax credit, where you can just essentially pull up your last tax return, put those numbers in, and see what you expect from a monthly standpoint. And then, of course, it'll help you understand what your credit is assumed it will be for the 2022 tax season for 2021. Of course, keeping in mind that money changes and situations change, so that's only an estimate of what is to be expected. But if you have any changes in the dependents that you have, or if in some of the difficult situations where they're divorcees and who's going to receive the tax credit on whose tax return. So that's one thing that we didn't get to. And I was kind of expecting that, but we didn't get it. But what if we're in that situation? Whose tax return does it go on? So they have what they call a tiebreaker rule, when there is a chance that either one of the parents or either one can take the dependent on their return. So you want to make sure that the taxpayer that's relinquishing the credit and relinquishing the dependent on their return, that they do complete that form for the taxpayer that will be including the dependent on their return, so they can, of course, get that tax credit on their tax return.
Gotcha. Perfect. Thank you. We will definitely make sure that our audience has access to all of those resources, as well as your information too. Definitely make sure you reach out to Reggie. Here's his information. You see his phone number, you see his email. We're going to drop in the website into the chat box one more time for you. And definitely make sure you follow him on social media. A huge resource. We couldn't be more thankful to have you, Reggie. Would you like to just kind of say any final last words with us?
Yeah, I just want to again thank you guys for having me on here. And what I'm doing is for this audience, for those people, the first 3 people that we get to schedule a consultation, and I can share that as well. You can see it down here at the bottom, but I can put it in the chat as well. Those that schedule a consultation with me by July 26th, and that doesn't have to be during that time frame. If they schedule it by then, will receive 10% off their services for tax preparation. So up to a roughly $250 cap. But yeah, if we get anyone that's interested in that, we do have that available. So I appreciate the time. I appreciate you guys and what you're doing with your school. And I just, thank you and continue on with the good work.
Yes, thank you, Reggie. I appreciate that. And definitely go ahead and take that info down, because I know, get that discount, y'all. Get that discount. So thank you, Reggie. We appreciate
No
it.
problem. You're welcome.
All right. So what we can go ahead and do is we'll transition to just kind of wrapping it up a little bit about Miles Ahead, like we said. So like this, Miles Ahead loves to just share the information with you. We were fortunate to have Reggie today, but this will not be the last Ed Talk. Every fourth Thursday at 7 p.m., come join us on our Facebook Live, and we're going to bring other community members to you, the things that you need to know. So this month was about that child tax credit, and we've got other components as well. So definitely in that chat, go ahead, take a peek, make sure you sign up for some time with Reggie. And of course, follow us, Miles Ahead, on social media. If you have not yet joined our Facebook family, please make sure you do so while you're there. Just go ahead and click and follow so that way you can keep track of all of these virtual events as well as our in-person events. And you can join our mailing list before our 12-month countdown. It is never too late to enroll your child because our spots are filling up pretty quickly. So if you have a rising kindergarten through third grader ready to go to school next year, definitely go to our website. You can pre-enroll them to reserve their space and make sure you sign up. And if you'd like to, you can also sign up to volunteer or donate as well. All right. And I think that is it for us over here at Miles Ahead. I want to thank again Reggie for joining us. You also have the wonderful Milton Hamilton, who's our vice chair down there. There you go, Milton. Great to see you. I'll see you again on Saturday. Thank you, everyone who joined us today. And we will see you for our next Ed Talk next month. All right. Bye.